Let us see the next question. Following is the historical performance information is available of the capital market and Tomplan Mutual Fund. So information is provided to us regarding the historical performance of like a mutual fund and capital market. So the information is provided to us from the year 2015 to 2024. We have been provided with the beta of the mutual fund. We have been provided with the return of the mutual fund, return on the market portfolio, return of the government securities. From above information, you are required to calculate the following risk adjusted return measure for the measures of Tomplan. Reward-to-variability ratio, which is given a name as Sharpe Ratio also. Reward-to-volatility ratio, or it is also given a name as Treynor ratio. Comment on the mutual fund performance. That is a question. I request all of you to go through the question, please. So friends, over here, in order to make the calculation of the Sharpe ratio, in order to make the calculation of the reward-to-variability ratio, we will make the calculation like this. It is X bar minus RF divided by standard deviation. We are required to make the calculation of this ratio for Tomplan Mutual Fund and at the same time say for the market portfolio. Only in that case we will be able to make a comparison, and based on that say we will be able to pass comment whether the mutual fund is like beating the market performance or not. That is what say we understand. I have provided this question along with the answer. We can see that say over here, as far as the return of the mutual fund is concerned, it is 11.05. Return of the market portfolio is concerned, it is 8.69, and the risk-free rate of return is 5.95. Then we'll make the computation of the standard deviation of the portfolio return. That is the second part of the question. Sorry, second working note. That is the Tomplan Mutual Fund standard deviation. Then standard deviation of the market portfolio. That is what we have calculated. Then we have calculated the Sharpe ratio. It is like return of the portfolio minus RF divided by standard deviation. So it is 11.05, that is return of the portfolio, minus RF 5.95 divided by standard deviation of the portfolio 9.36. Based on that, so the Sharpe ratio is calculated 0.545. Similarly, we are required to do working for the market portfolio. It is RM minus RF divided by sigma m. RM is what we have calculated over here, that is average. RF is what we have calculated again over here, and standard deviation of the market portfolio is calculated over here. With that, say we have calculated the answer. Making comparison of this two, we can say that say the performance of the mutual fund is better than so the performance of the market portfolio. The second part of the question is calculate the Treynor ratio. Dear students, over here you can see that so the information about the beta is given. That is the reason say what institute has done. Institute has provided a suggested answer wherein average is taken as the beta of the portfolio. Simple. We do not have to do anything else, but we have to take the average. So we have made the calculation of the beta of the portfolio as average of all this, and it is 0.87. So again it is RP minus RF divided by beta. In case of the market portfolio, always the beta is 1. Again, this is the way you make a comparison, and you can see that the performance of the mutual fund is better. What I want to tell you, friends, that applying the formula R into standard deviation of security divided by standard deviation of market portfolio. This is also the way you can compute the answer. But since we already have been provided with the beta, so we take the average of them as the beta of the portfolio. This is the way we are required to make the computation of the Treynor's ratio for both of them. And so we are required to pass comment. So Sharpe ratio of the mutual fund is higher, Treynor's ratio is also mutual fund is better. Thus from above it is clear that Tomplan Mutual Fund has performed better than that of market.